staggered fashion. For now, Israel is restraining itself to airstrikes, albeit with a good deal of damage and casualties in the Gaza Strip, while pressuring Hamas to return to negotiations on terms more agreeable to Israel. So it would not appear right now that Israel is intent on a full resumption of the war to the point where Hamas might be crushed militarily or Israeli troops sweep through the Gaza Strip again. But it's in that direction while leaving the door open for Hamas to come back to the negotiating table with different terms.
Dan, how should we be thinking about the situation there between Israel and Hamas happening concurrently as we're seeing the U.S. escalation against the Houthis? How are you assessing now this escalation of conflict now in the region?
Well, I think we're seeing one set of allies, Israel needing
Welcome.
taking on another set of allies, Hamas and the Houthis.
Furrick 23, welcome. Appreciate you.
Both of those groups
The real Abhinav, welcome.
explicitly by President
Is that a rainmaker in the house?
did fire one ballistic missile at Israel yesterday, which was probably to be expected.
What, Tuesday night, March 18th, 2025.
Still up and fighting on behalf of Gaza.
Going to talk about some stock market stocks tonight. Thank you for joining the team. Throw me some coins, I don't mind. Gonna do stocks tonight. Maybe look at some trades, some positions, see where this market's going. I'll answer my questions. I'll try my best. And I'll go for about an hour. I like to go Monday night or Tuesday night. Today is Tuesday night. And then a random day in the week. If you guys want to sub, it's only $5. I guess TikTok's not going anywhere because, why? Because Trump wanted to ban it and then he unbanned it. So only Trump can undo what he did. So I guess we're okay. So don't worry about subbing. It's only $5 a month. You know, subs, you already know I take care of you. Most of your subs already have my cell number. Am I right? So just one text away. Tonight we're going to look at a couple different... But wait. Dow Jones, 41,581, down 260. A little pullback today in the techs. Oh, but look, gold is up. Gold, I have to say, I called gold 3,000 a little while ago. It's good to be right, Yeah, what can I say? Well, I always say there's always some stocks going up, even in a bad market. I think right now we're kind of like in a pullback. Right now we're kind of like in a little sell-off, healthy sell-off, but within a greater bull market, I think. So be prepared for it to come down a little bit more. Let's say in especially the techs. But I think overall we're going to go up. Let's say by next year we'll be higher. And I do think gold is going up right now because different reasons. But for example, you guys heard that China was buying up all the gold, right? Like years ago. You heard that? Got your journals today. Write down these stocks, GLD. So I don't do futures really. I don't do crypto, but I just do stocks. So the gold stock is GLD. It's kind of like an ETF. One of the ETFs I follow. Very few ETFs I follow. So it doesn't track the gold price exactly, but it kind of has. It's pretty close. 279, 280, really. So like 29K, 28K. That's right there. GLD, 280 a share. $28,000 per 100 shares. Okay. Now you might notice that the gold price doesn't move that much. It's kind of quiet, and then it kind of moves, and it's kind of quiet. So it tends to hold its value over time, and right now it is going up. It's on an uptrend. Right here behind me, I have a 6-month chart. So wait, hang on. Here's a 6-month chart. Is that right? No, here's the 1 year, actually. So let's look at the 1 year for gold. March 2015, we have 113. Okay. And then today is 284. Let's do the math on that. 284 minus 113 equals 171 points up. And we divide that by 113. Just try to have 150% return. Write that down. 151. Is that right? Definite uptrend. This is the year for the GLD chart. So why not do a position in gold if really gold's going up? I think a lot of the millionaires are putting the money in gold. Different reasons, but let's just say when there's like a WAR brewing, that kind of causes like uneasiness in the world markets, and then that sends the gold price up. You know, Ukraine, Russia, for example, Israel, Hamas, for example. Now Iran is a big player right now. We look at them. They're not happy, for example. So I think gold just go higher. Am I right? Should we call it, let's say, gold 6 months, I don't know, 330? So let's look at the 6-month chart meanwhile. Here I have the 6-month chart on gold. It's showing 239. And then current price 280. Do the math on that. 280 minus 239. Follow along. 41 points higher. And 41 points divided by 239. 17%, 17.1% increase. Not that much, but steady. You can see there's some trading. Doesn't move that much. It's not like a tech stock, not like Tesla. But notice that when it hit 3,000, it didn't just turn around and sell off. It just kind of crept up, kind of kept going up, which is to say that it kind of just walked through that threshold and didn't really sell off. So to me, that indicates it's going higher, I think. Write it down, GLD, 280 a share. It's probably pretty safe. It's probably a lot safer than a tech stock. It's probably somewhere safer than like a big fat dividend stock, I think. And here we have a definite uptrend with the world markets the way they are. Right now, I think the millionaires are buying gold. It's just being bought up. And back in the day, I remember 2014. You guys find my picture somewhere on Facebook. You'll see me with some gold coins around that time. I remember it was $1,400 an ounce. So now it's more than doubled, right? In what, 10 years, 11 years? So that's the kind of increase we can get on gold. And I remember the platinum price was around $1,000 or $900 an ounce for platinum. And historically, platinum has always been higher than gold because it's more rare. And both gold and platinum are used for different things. Like they use platinum for catalytic converters. They use gold for computers and computer chips. But for whatever reason, the gold price pulled ahead of the platinum price. And this is one of those trades of a lifetime where you see like an imbalance. But shockingly, even though platinum is more rare than gold, or rarer, when gold passed platinum, it just kept going. It just kept going and didn't come back. So now the platinum price is still around 1,900 something. You look at platinum per ounce. And then the gold just shot up, and now it's triple. Now it's 3,000 plus. So to me, that indicates it's just out of control. People are buying it. like crazy. We'll take a few questions. I'm gonna show you the real Abhinav. What if there's no gold in Fort Knox? LOL. You know what, Abhinav? I don't know. Did Trump check Fort Knox? So he was gonna check. He was gonna check Fort Knox to see if the gold was there. I don't think we did that yet. I think we're gonna do that maybe soon. But like, just imagine that if it's short or if it's not there, dude, this process just goes straight up. I mean, it can only go higher, right? But here's the thing with that, right? Fort Knox. You know what? I was on DeepSeek. I was using DeepSeek because I'm kind of liking DeepSeek better than ChatGPT. Don't call me a trader, but DeepSeek just seemed to flow better. I was finding out how many ounces of gold were in Fort Knox. Let me see if I can do this right. How many ounces of gold are in Fort Knox? And at $3,000 an ounce, how much value is that? Because why not? Because what is AI good for? Let's see.
As of the most recent data, Fort Knox holds approximately 147.3 million ounces of gold. To calculate the total value at $3,000 per ounce, 147,300,000 ounces times 3,000 USD/ounce equals 441,900,000,000 147,300,000 US dollars / text ounces / times 3,000 / text USD/ounce equals 441,900,000,000 / text USD 140.
Okay, so according to DeepSeek, there's $441 billion in gold in Fort Knox, but that doesn't seem like that much. It's not even a trillion, because there's $56 trillion in the stock market. Let me see something. Who has more gold? China or USA? Anybody want to bet money before I press enter? Who has more gold, China or USA? See what they say. Because USA doesn't even have a trillion according to the Fort Knox.
As of the most recent data, the United States holds more gold than China. Here's a breakdown. United States, the US holds approximately 8,133 metric tons of gold, which is the largest official gold reserve in the world. Most of this gold is stored at Fort Knox, the West Point Mint, and other secure locations. China holds approximately 2,113 metric tons of gold, as of 2023. While China has been increasing its gold reserves in recent years, it still holds significantly less than the US. Key points. The US has the largest gold reserves of any country. China ranks lower in terms of official gold holdings but has been actively increasing its reserves as part of its long-term economic strategy. Gold reserves are often seen as a measure of financial stability and economic strength, and the US has maintained its position as the global leader in gold holdings for decades.
So according to this DeepSeek, China has approximately 1/4 of what the US has. 2,113 metric tons versus US 8,133 metric tons. And they say the US has the most in the world. Let me see. If I had enough money and were to just buy gold on the open market, how much gold can I buy, considering USA 8,113 tons, and China's 2,113 tons are not for sale. I mean, how much gold is actually available? Let's put this chatbot to the test. Thank you guys, appreciate you. Get the likes up to 1,000, appreciate you. Throw some coins my way if you like the live. It's thinking. Sometimes it kind of craps out. That might happen. Here we go.
The amount of gold available for purchase on the open market is a fraction of the total gold ever mined. While the US, 8,133 tons, and China, 2,113 tons, hold significant reserves that are not for sale, there is still a substantial amount of gold traded globally. Here's a breakdown. Total gold ever mined. Approximately 208,000 metric tons of gold have been mined throughout human history, as of 2023. Of this, a significant portion is held in central bank reserves, like the US and China 35,000 metric tons. Jewelry, 90,000 metric tons. Private holdings, bars, coins, etc. 40,000 metric tons. Industrial use, electronics, dentistry, etc. 30,000 metric tons. Gold available on the open market. The gold available for purchase on the open market primarily comes from annual gold production. Around 3,000 to 3,500 metric tons of gold are mined annually. Much of this enters the market. Recycled gold, scrap gold, from jewelry, electronics, etc., adds another 1,000 to 1,500 metric tons annually. Private sales, individuals and institutions sometimes sell gold bars, coins, or ETFs, exchange-traded funds. At any given time, the liquid gold market, gold actively traded, is estimated to be in the range of 20,000 to 30,000 metric tons, including gold held by ETFs, 3,500 metric tons. Gold held by bullion banks and dealers. Gold in vaults available for trading, example London bullion market. How much gold could you buy? If you had enough money, you could theoretically buy a significant portion of the liquid gold market, but there are practical limits. Market impact.
Thank you, appreciate you.
Buying large quantities would drive up the price of gold due to limited supply. Physical storage. Storing thousands of tons of gold would require massive secure facilities. Market liquidity. Not all gold is immediately available for sale. Much is held long-term by individuals, institutions, and central banks. Estimated value of liquid gold. If we assume 20,000 metric tons of gold are available for purchase on the open market, 20,000 metric tons equals 20 million kilograms equals 643,014,931 troy ounces. At $3,000 per ounce, this gold would be worth 643,014,931 Oz times 3,000 USD/Oz equals 1.93 trillion USD. 643,014,931 //
Okay, according to this, if you had enough money, you could buy something like 20,000 tons of gold. And at $3,000 an ounce, that's 600, I'm sorry, that's 1.9, about $2 trillion. But there's only 8,000 in Fort Knox, and China has only 2,000. So it's about, what's available is about triple what is on reserve in China and US. So it's not that much more, but it is a lot more. So, and they talk about funds having gold funds, 3,500 tons, which is more than China, but less than the Fort Knox. They talk about annual gold production, which is 3,000 to 3,500 tons, which is, again, more than China, but less than Fort Knox. Recycled gold, 1,000 to 1,500 tons. Private sales, they're not sure, but they know they have private sales of gold bars, for example. So there's the total gold in the world. Well, that's not counting Africa. This is just talking about the total production and Fort Knox in China. But if you count the total production, Fort Knox in China, and what's available, it's something like between 40 and 50,000 tons, which is about $4 trillion, which is not that much. So gold is still pretty rare and pretty hard to get. And that's why I think it's going up, because people are buying it. That's what ChatGPT says. Any questions on that? So it won't. Thank you for the likes, guys. Appreciate you. So it's not. Here's the thing. You see these trends in the market, and we've been looking at gold for a long time. Different things. I noticed lumber. Like when I was back when I started trading, I remember lumber is about $100. Then it went to $150, and I told myself, well, lumber as a commodity is definitely going, up, because there's less and less trees in the rainforest, for example. And they can only grow them so fast. So lumber went from 100 to 150. Now it's like 650 lumber. So that is like an obvious uptrend. I don't see how lumber can ever go down. The only question would be, does lumber match what's it called? Interest when it goes up. Oh, inflation. Does it match inflation? Because you can't make money unless it passes inflation. So that's something going up. But like gold, obviously, since it passed platinum, it's just been pretty much going up pretty steady. If you look at the charts, it doesn't go down that much. So I'm thinking that it's just going to go higher. It's not going to be like a crazy tech stock, but if you put some like in your IRA, like this gold ETF, or if you want to buy some gold coins, if you buy a gold coin, okay, at your local coin shop, seeing that the gold price is $3,030 an ounce, they're probably going to want to charge you between $100 and $200 commission. First of all, they may not sell it right now because of gold breaking 3,000 is a very important threshold. But they may not want to sell it to you because why would they sell something going up in value when they've been holding it for so long, But they sold you a gold coin, let's say a South African Kukuran, right down South African Kukuran, which is has that like antelope on the back, or you have the Canadian maple leaf. That's a gold coin. The South African Kukuran's a gold coin. They also have the Indian head. I'm not sure what you call that. Indian head coin. These are pure gold coins, most of them. And they trade the gold price, but they're going to charge you like $100 to $200 a commission because they got to pay rent. They have payroll, for example, so they're going to want to get a commission. So be expected to pay like between $3,100 and $3,200 per gold coin, okay? If you can buy them. But here's the thing. That's at a local coin retailer that charges like, that is a retail that has rent, for example. They got to pay rent. If you can find a private gold collector, trader enthusiast, there's really no commission, so you can just like trade it back and forth with people. that I don't mind buying or selling. And there'll be no commission, so you can literally like trade the gold coins, whether it's South African Krugerrand, the Canadian Maple Leaf, or the Indian Head, at the gold price, and there shouldn't be any commission. They could charge commission, $50 or whatever, but they don't have to, and you don't have to, and you should be able to. Now, when you sell your coins back to the coin store, again, unfortunately, they probably want to charge you a commission because they want to resell it. So they might take, let's say $50 off the gold price. So now then you're back at, let's say, $29.50. So that can happen. So that's why this gold ETF is much better to trade as far as dollars per dollars. You don't get the physical gold, but you get the advantage of having the gold price going up. So 280 a share, write it down, and 28K for 100 shares. I'm gonna look at some covered calls, and this is gonna be the option chain. Now, you guys who follow me know that I do monthly covered calls and pay my bills, and I teach you guys how to do that. And here is the option chain for gold. And let's say we go, well, this is a year. Hang on, this is a year. Let's not do that yet. Let's do, here is, this didn't go back far enough. Hang on. Well, let me pull it up here. Let me pull it up on Schwab. Gold, you pull up gold, GLD. Look at the option chain. Click on options. Calls and puts. Put all. So let's just say we spend the 28K here, buy 100 shares, right? If you guys don't have 28K, I gotta say it. Sell all the shit in your garage. All right, so you got 1 month, April 17, 29 days, close enough. And we agree to sell the share. Let's say we go at the money because it does move slowly. We expect a small move, but not a huge move. But at the money will be 280. The 280 strike is paying 550 by 560. 550 by 560. Okay, so that means that you spend 28K, buy 100 shares of gold ETF. Right to come and call next month at the money at 280 for getting $550 at the bid for agreeing to sell it for 280. Okay, should the price go higher, it probably will creep up higher. Let's do the math on that. 550 divided by 280, showing 1.96%, almost 2% return. Not a great return, but considering that it's a gold price, it's probably not going to fluctuate that much. It's not going to be like a tech stock like Tesla. Like, if you guys ever been Tesla, you know what kind of crazy ass, wild roller coaster ride you're on with Tesla. It's not going to be like that. It's going to be more like maybe like a fat dividend stock like McDonald's or something, So considering that, it's not a bad return. I mean, millionaires don't mind making 2% a month. That's 24% a year. Now, if we look at, we can go a little bit higher and get some share growth. For example, the 281 is paying $5, 50 cents less. The 282 is paying $4.50. 283 is paying $4.10. So it'll still get you a nice return, agreeing to sell it higher than the strike price. That way you get share growth. If we do like a little sweet spot, which I think is a sweet spot on stocks, we do it for gold. Go 4 points, 284. I would sell the 283 for 410 because you get 3 points of share growth, 410 premium. At 410 premium, it's still something. 4.10 divided by 280. 1.46%, almost 1.5% return. Not great, but considering it has a low beta, which is to say that it's not going to fluctuate that much, it'll probably help hedge your account. It'll probably help control your drawdown. And like also, gold doesn't work. The gold price doesn't trade opposite the market, but it tends to be counter the market as far as counter stocks. So we have, let's say, a crash, right? For sure, the gold price will be going up. People are taking money out of the stocks into gold, into certain other derivatives that are more safe, bonds, for example. So it does kind of work counterintuitive to the market, sort of, not always. So when there is a correction, it's kind of nice that your gold will be going up. That will happen. Keep an eye on that. Like the millionaires have it because, like, for example, and silver too, but they can't afford to lose everything because they have professionals that they gotta like make it work, make money. So that's why they'll hedge like in gold. They'll hedge like in also like in puts, SPY puts, different shorten the market. So gold's a natural hedge. If you buy the shares, you don't have to worry about time decay in the option. I wanted to show you the year on gold. Okay, and here's another trade. If you want to go long term, here's the 1 year on gold. Okay, so you spend 28K, right? Goes at 300 days to January 2026, which is 1 year, well less than a year, but 300 days, and it's paying. Do you have 18 by 20 for the 280? So let's say $19. That means that you agree to sell the gold in 1 year, actually 300 days from today, January 2026. For that, buy it today, agree to sell it in January next year. For that, you're going to get paid, can we say $19 limit right in between? 19 limit. Let's look at the price on that. This is kind of a good hedge for you stock market traders who don't want your account going all crazy. So we'll do 19 points, which is $1,900 per contract, divided by 280 your cost. 6.78%, almost 7% return. So that's what you're looking at for gold. A little more quiet, but considering prices going up, it's probably a pretty safe bet. You can, of course, write the higher strike, a less return, but having that share growth. So just pick your level of risk versus reward. Any questions on that? Yeah, so I'm showing you this uptrend. Probably it's going to continue higher. I don't see it selling off. Questions? George Lopez, what's up, old Dusty? Taco, welcome, my friend. Ask me some questions. I'll try to help if I can. I'm Godric, your stock market mentor, coming at you at least once a week, if not twice a week. I am up over 79% in 2 months. Steve, you're up over 79% in 2 months. Awesome. What are you trading? Gold. Best gold and silver plays are the juniors EXK, CDE, ASM, BTG, my favorites. Thank you, Steve. Appreciate you. Yeah, I'm not it sounds like you know your gold. I'm not the expert. I'm just on this one stock ETF. Just for diversification for the young investors. I'm sure that there's a lot more ways to invest in gold ETFs. Appreciate you. I'm sure you probably know about writing the cover call, Steve, and that kind of gives you, in my case, the way I teach it, a monthly income for writing the higher cover call or writing the cover call at the money. Because why not? Synthetic gold. Real up and up. You know what? Actually, you bring up a good question. So, if you guys know, you can make synthetic diamonds in a lab. And they can do it like for different ways. And the synthetic diamonds, like with the naked eye, you can't tell between a synthetic diamond made in the lab and a real diamond made in the volcano under a million years of pressure, whatever they say. However, you can look in a microscope, and they have machines that can tell if your diamond is synthetic versus authentic. So you can tell the difference. With gold, which is to say that synthetic diamonds aren't really going to be the thing because the real money is in the real diamonds that are made under the earth. That's all I want to say about that. So I heard that you can take like platinum and uranium and splatter it with, hit it with like a neutron blaster or whatever, and it can spat out some gold. Okay, but they say that the gold you make that way is not what's the word, practical, because it costs you more to make it than it costs you more to make it than the gold's worth, right? Which is what I think the real Abanoff meant with synthetic gold. So you can actually make some gold in a lab, in a sciencey lab, but as far as we know, so ask DeepSeek, the result is not going to be, it's going to be negligible. But here's the thing: as we get more technology, they might be able to make some synthetic gold. So in that way, the gold price might be at some point threatened. I'm not sure. There's always a chance that in investments there's never 100%. It's always a chance of risk. This is what you guys got to realize. There is no free guarantee. That does not work. That does not happen. I remember watching what was it? What's that old black and white Twilight Zone? I can't tell you. I can't tell you how old I am. A Twilight Zone, and one of the Twilight Zones had a dude. He came out of a portal. He was holding a gold bar. He unalived on the gold bar, and he was holding it like this, and he was trying to go to the future when gold was going to be really rare, and then he would be rich, you know. And then the guy's like, well, he didn't know that we produce gold in the lab for free. So yeah, it's possible at some point in the future they're going to make gold in the lab with other chemicals, kind of like what's that book, The Alchemist, right? But as of now, okay, let me just check with ChatGPT. I don't want to mislead you guys. Can you make gold in a lab? And how much, and will this threaten the gold price? Let's just see what they say. Now, here's the thing. Do you really trust these guys? Like, even if they went into Fort Knox and they say, all the gold is here, like, do you really trust them? I mean, you don't really know because you're not there. Let's see what DeepSeek says about the synthetic gold. See if we can get it. I might have to read it for you. Hang on. Dude, when this thing wants to talk, it prints a lot. I'm just gonna read it here.
Yes, gold can be created in a lab, but it is not practical or economical to do so on a large scale. Here's an explanation of how it works, the limitations, and why it doesn't threaten the gold price. How gold can be created in a lab. Gold is an element, atomic number 79, and creating it requires nuclear reactions. This can be done in two ways. Nuclear fusion, combining lighter elements, example hydrogen or helium, under extreme pressure and temperature to form heavier elements like gold. Nuclear transmutation, bombarding other elements, example platinum or mercury, with neutrons or protons to change their atomic structure into gold. In fact, scientists have successfully created tiny amounts of gold in labs using nuclear transmutation. For example, in the 1940s, researchers bombarded mercury with neutrons to produce gold. However, the process is incredibly expensive and yields only microscopic amounts.
Okay, right here is super sus, because why would the hell would they tell me what happened in the 40s when that is like going to be 100 years ago? Like, we haven't like advanced since 1940s? You guys got to like listen to what they're really telling you.
Of gold. Why lab-created gold doesn't threaten the gold price. Cost. The energy and equipment required to create gold in a lab far exceed the value of the gold produced. It is not economically viable. Scale. The amount of gold that can be produced is negligible compared to global gold demand and supply. Annual gold mining produces around 3,000 to 3,500 metric tons, while lab-created gold might yield micrograms or milligrams. Natural gold dominance. The gold market is driven by mined gold, recycled gold, and central bank reserves. Lab-created gold would have no meaningful impact on supply. Market perception. Gold's value is tied to its rarity and historical role as a store of wealth. Lab-created gold would likely be seen as artificial and less desirable. Could this change in the future? While advancements in nuclear physics or energy production, example fusion power, could theoretically make gold synthesis more feasible, it is unlikely to become economically viable anytime soon.
You guys get all that? They only make micrograms in labs, and obviously the gold price is the gold mining worldwide is like 3,000 tons a year. So in that way, it's not going to affect the gold price unless they do it on a massive scale. It could happen, but I don't think it'll happen. It is, you got to use your best judgment. I don't know. Welcome, Detours Digital. Detours Digital says, I knew a soldier who worked at Fort Knox years ago. Detours Digital, do you want to come up here to talk on our live to tell us your story about gold? If you want to come up here, you can tell us. I generally only let subs up, but once you're up, you want to talk about gold. So, while he decides that, I do think gold's going up. We should look at these trades. There is an option trade. I mean, I can show you an option trade, but it's risky because the gold price doesn't move that much, that fast. It's not like a tech stock. But what the hell? Let's say you want to put some money into a gold spread, right? A gold spread is where you buy and sell a call, okay? And let's go 3 months because I don't go less than 3 months for options. So April, May, June. So go to June 20th, 93 days, because why not? You can also go the quarter, 103 days. But let's just go June, 93 days. Let's say you got, at the money is $10 by 10.25. So I'm looking at the 280 strike. At the money is 10 by 10.25. 10.05 by 10.25. And then let's say you want to put, I don't know, $500. Anybody have $500? Go out 3 months to June. Buy the 280 call, which is at the money, and then sell the $5. The one for $5 back is $292. $293. Plus one 280, plus one contract at 280, minus one contract at the 293 call. So you're gonna spend 10.05, which is $1,000, $1,005. Okay, to buy a 280 call for 3 months out in June. You're gonna sell the call for the 293. And I picked that one because I'm gonna give you $500 back, which means you get $500 back on your investment. So your investment's only $500. Okay, but it's a 13-point spread, the 280 to 293. So should gold move in 3 months to 293, which it probably will, but maybe not because it's moved slow. But just go with me here. Your spread will become $1,300, okay? It only costs you $500 to get in, and it ends up being $1,300. Let's do the math on that. Here's where you use leverage, right? Using options to leverage your investment, because you spend $28K and you get $1,300, or you can spend $500K and get, let's see, $500. Well, minus $1,300 is going to be $800. So $800 profit. $800 profit. divided by $500 investment, 160% return. So 1.6 fold or 160% return on a gold spread. You buy the 280 call for June, instead of 293. That's a 13-point spread. Because you own the 280 option, it caps out at 293, which is the one you sell to get back to 500 to make your investment from 1,000 to 500. And because the 280 call can go to 293, that's going to be worth 1,300, and then your 290 will be basically capped off. So you come out of the deal with 1,300. You came in with 500, $800 profit divided by your $500 investment, 160% return. And that is the golden nugget for tonight. Questions? You're not going to come here, Detours? Can you look at Dell? Oh, man. But did he say the Fort Knox was empty? Detours Digital. We don't know if Fort Knox is empty. I'm assuming the gold is all there, But here's the thing, Detours. Even if, regardless if it's empty or full, will they tell you the truth? Because you're not going to be there. They're showing you like a news thing. I'll bet that when they look at Fort Knox, it's all going to be there. And the truth is we can't trust them. That's the truth. So I just think it won't be really a story. But if it isn't there, that's going to send the gold price up. I'll just tell you that right now. But you know what would threaten gold? You know what would threaten the gold price? Actually, in a good way, is WAR. WAR will send the gold price up and the stocks down, just like Afghanistan did, Kuwait, Qatar, the stocks tend to slide, gold price goes up. That could be, wait a minute. They wouldn't start a war just to have all their billions of dollars of gold go up in price, would they? They would never do that. No, that would never happen. We trust our government. Questions before we wrap up, guys? That's all I got for tonight. I will do Dell for you. Don't make me do Dell. I'm trying to stay on goal right now. I'll do Dell for you next time. Put in my DMs. I'll send you a DM. No, they will not tell you what they want. No, they will tell you what they want you to believe. Detours Digital. I'm kind of liking you a little bit more every day. They will tell you what they want you to believe. I think it was my dad that told me, only believe half of what you see on TV. And I thought about that. I didn't care what the hell. I didn't care what that meant. But later on, after he passed, I realized what that really meant. These fuckers are lying, dude. You can't trust anybody nowadays. War is very profitable. Detours Digital. War is very profitable. Ain't that a BITCH? Facts. Guys, about to wrap up. Appreciate you. We talked about GLD. Here's the GLD stock behind me. $280 a share. You can buy a call option for $1,000. If you do a spread, it's only $500 for June. $280 by $293. Possibly, you'll get $1,300 out of that if the gold price goes up, which it probably will. Gold price is pretty, what's the word? Stable, I think, over time compared to a tech stock, anyways. Won't go down that much, but probably it'll go higher because we're in an uptrend. This is kind of what we're talking about. You want to DM me? Send me a DM. Only one question at a time, please. Throw me a subs, only $5 a month. According to Trump, TikTok is not going nowhere, so don't worry about subbing. And appreciate you guys. Godric out.